Right now, as you're watching this video, something unprecedented is happening to your money. The US dollar just suffered its worst year since 1973, dropping nearly 11% in the first half of 2025 alone. Well, your savings already worth 11% less. Your paycheck buys 11% less when you travel abroad. And here's the kicker. This isn't an accident. This isn't economic chaos. This is deliberate. Behind closed doors at Mar-a-Lago, President Trump and his economic team have been executing what insiders are calling the most dangerous financial experiment in American history. They're intentionally crashing the dollar, and whether you lose or win depends entirely on what you do in the next few months. This is the story of how they're pulling it off, why your financial future is on the line, and what the data actually shows is happening right now. Let's start with the facts, because the numbers tell a story the mainstream media keeps missing. The dollar collapse. January 27, 2026. Trump told reporters in Iowa the dollar's decline is great for America. The dollar immediately plunged another 1.5% in a single day. It's now at its weakest level since early 2022. For 2025, the dollar index fell 9%, the worst performance since 2017. But here's where it gets interesting. Traditionally, when there's global chaos, money floods into the US dollar. It's called the safe haven effect. Wars break out, dollar goes up. Economic crisis, dollar goes up. That's been the pattern for 80 years. Not anymore. What's different this time? Trump's policies, tariffs, threats to fire the Fed chair, claims to Greenland are doing something no president has done before. They're making the world's investors afraid of holding US dollars. And the data proves it's working. Gold demand just hit its highest level in over 10 years as investors flee the dollar. The euro strengthened against the dollar. Even emerging market currencies are rallying. Stephen Jen, the economist who created one of Wall Street's most popular dollar models, just warned his clients, a structural dollar correction may be afoot, and many may not be prepared for it. Translation? This isn't temporary. This is the beginning of something much bigger. So what exactly is the Mar-a-Lago Accord? It's not an official policy document. It's a strategy, a blueprint designed by Trump's Council of Economic Advisors Chair Stephen Miran and Treasury Secretary Scott Bessent. The goal? Deliberately weaken the dollar to force American manufacturing back from overseas. The logic. For decades, the U.S. has maintained what's called a strong dollar policy. Sounds good, right? Strong equals good. But here's the problem that nobody talks about. When your currency is too strong, your exports become unaffordable. If Ford tries to sell a car to Germany, that expensive dollar acts like a 30% tax on German buyers. Meanwhile, Chinese cars backed by a cheaper yuan fly off the lots. The result? American factories closed. 5 million manufacturing jobs lost since 2000. Entire towns in Michigan, Ohio, Pennsylvania hollowed out, while Wall Street got rich buying cheap foreign goods. Trump tried tariffs in his first term, 25% on steel. The results? Devastating. According to the latest data, that trade war cost America 170,000 manufacturing jobs and bled companies $46 billion. Why? Because every time Trump announced tariffs, global investors got scared and poured $200 million into U.S. assets. That flood of money pushed the dollar higher, making American goods even more expensive. The tariffs couldn't fix the problem because the dollar itself was the problem. Enter Bessent's radical solution. Scott Bessent realized something crucial. You can't rebuild American manufacturing with a currency so strong it functions as a wall against your own exports. But here's the challenge. In the modern global economy, you can't just print money and devalue your currency like they did in the 1970s. Capital moves too freely. International investors would see it coming. So instead, they're weaponizing something more powerful, uncertainty itself. Here's how it works, and this is where it gets wild. Liberation Day, April 2000. Trump announced sweeping tariffs targeting not just China, but Germany, Canada, Mexico allies. Rates as high as 49%. Markets went into freefall. The Dow dropped 8% in a single day. Chaos. Then weeks later, Trump walked it back. Cut the tariffs in half. Media called it a retreat. Economists called it incompetence. But the Mar-a-Lago team? Mission accomplished. The real goal. The point wasn't the tariffs themselves. The point was to shatter investor confidence in U.S. policy predictability. Think about it. If you're a Japanese pension fund manager, You've traditionally parked billions in U.S. Treasury bonds because they're safe. But now you don't know if Trump's going to announce 49% tariffs tomorrow. You don't know if he'll try to fire the Fed chairman. You don't know if he'll threaten military action over Greenland. That fear becomes a tax on holding dollars. And fear works faster than any policy. Just 2 weeks ago, Trump said the dollar's decline is great for America. The currency immediately cratered. He's not even using policy anymore, just words. And it's working. Recent data shows U.S. exports increased 6.3% year over year through October 2020. American goods are cheaper for foreign buyers. Some manufacturing indicators showed growth in Q3 after months of decline. The trade deficit actually started shrinking in August after tariffs took effect. But, and this is crucial, manufacturing is still contracting overall. The Institute for Supply Management's December report showed manufacturing at its lowest point in over a year. Export orders? Still falling, with companies reporting 1.5 negative comments for every positive one. So the strategy is working, and it's not working. It's succeeding at weakening the dollar, but failing at quickly reviving manufacturing. Now let's talk about who's paying for this experiment. Because make no mistake, there are winners and losers, and you need to know which side you're on. The U.S. national debt just hit $38.4 trillion. We're adding $8 billion per day, every single day. Interest payments on that debt, they just crossed $1 trillion per year for the first time in history. That's 15% of the entire federal budget. More than we spend on all of Medicare, more than national defense. Only Social Security costs more. Here's the terrifying math. Every 1% increase in interest rates adds roughly $384 billion to our annual interest bill. As the dollar weakens and foreign investors pull out of Treasury bonds, the government has to raise interest rates to attract new lenders. This is what economists call a debt spiral. We borrow money to pay interest on money we already borrowed, which requires more borrowing, which requires higher interest rates, which requires even more borrowing. The tech sector at risk. Silicon Valley is staring into an abyss. Why? Because the AI boom isn't built on profits, it's built on leverage. In 2009, tech companies issued record debt to build the massive infrastructure needed for artificial intelligence. That only works with low interest rates. If the dollar's devaluation keeps rates elevated, the cost to service this debt could double. For many speculative AI firms, that's a death sentence. We're not talking about a market correction. We're looking at a potential AI bubble burst that could push us into a deep recession. And then there's you. If you're planning a European vacation, bad news, your dollars now buy 11% less than they did a year ago. That dream trip to Paris just got 11% more expensive. If you import anything for your business, your cost just went up. If you hold cash savings, you just lost 11% of its value against foreign currencies. But if you're an exporter, if you make things in America and sell them abroad, your products just became 11% more competitive overnight. Here's what Trump and his team are really doing and why it's so dangerous. There's an economic paradox called the Triffin dilemma. It says that any country whose currency serves as the world's reserve must run massive trade deficits to supply the world with enough of its currency. This makes the world happy. Everyone gets dollars to trade with, but it destroys your domestic manufacturing by keeping your currency artificially expensive. For 80 years, the U.S. chose to be the world's banker. We prioritize global stability over American factory workers. Trump's strategy is a radical rejection of that responsibility. He's choosing to break the dollar's reserve currency status to restore American industrial sovereignty. It's scorched earth economics. He's burning down the international order to rebuild the American internal order. The critical question: can it work without triggering total systemic collapse? Nobody knows. This has never been attempted before on this scale. If it succeeds, America could see a genuine manufacturing renaissance. Factories reopening in the Rust Belt, jobs returning from China, a real industrial revival. If it fails, we could see a currency crisis, sovereign debt default, and economic chaos that makes 2008 look like a dress rehearsal. We're witnessing a high-stakes experiment in real time, and you're living through it whether you like it or not. Let me be crystal clear about what the data tells us is happening right now. What we know. 1. The dollar has fallen nearly 11% in a year, the worst decline since 1973. 2. This is intentional policy, not market accident. 3. Manufacturing results are mixed, some growth, but overall still contracting. 4. National debt interest just crossed $1 trillion annually. 5. The trade deficit is starting to shrink, but slowly. 6. Investors are fleeing to gold at rates not seen in a decade. What this means for you. If you're holding cash, you're losing purchasing power every month. This continues. If you're an exporter or American manufacturer, the weak dollar is making your products more competitive, but demand is still uncertain. If you're in tech or rely on low interest rates, you're in the danger zone. If you own hard assets, real estate, commodities, precious metals, you're being systematically protected from dollar devaluation. The bottom line, the era of the unshakable dollar is over. The system that's been in place since 1945 is being dismantled by the very people who built it. Whether this is economic genius or reckless gambling, we're about to find out. And your financial future, what you do with your savings, your investments, your business in the next few months, will determine whether you're a victim of this devaluation or a survivor of the new order. The machinery is already in motion. The question isn't whether this will affect you. The question is, are you prepared? What do you think? Is Trump's strategy genius or disaster? Drop your thoughts in the comments. And if you want to stay ahead of these economic shifts, hit subscribe because this story is just beginning.